Hi, I'm Hedgeye founder and CEO Keith McCullough. I'm excited to announce the Hedgeye on the Prize tournament. I challenge you to compete in this simulated investing tournament to win some serious money. We'll be awarding weekly and monthly cash prizes along with the big grand prizes. Along the way, we'll teach you how to take your investing to a whole new level. I hope you'll join us. I'll be coaching you every step of the way.
And Sciver, industrial production. So this is a number that it was yesterday after the call. So I think it came out at 8:30 or whatever. But it decelled in September. So that validates the bottleneck theories, and it's not just theory. It's just what the rate of change data actually did. How do you think about this? Because that's unlike retail sales, right? And this is basically my point: is that we don't know when inventories are going to release. That when they do, that's a big upside to our GDP nowcast, which is already well higher than Wall Street. Atlanta Fed's at 1%, we're at 6%, which is a massive delta sequentially. And I'm very confident that the reopening of the economy gets me right on the consumption retail sales side, service economy. But inventory is like the big open question. And every client call, I'm like, I have no idea when. But it's not like never. We know that. How do you deal with that discussion? Because it's such a big waterfront of inventory across different sectors with so many moving parts.
Well, I think that we're trying to get the relative share price moves right, and industrial production is a lagging indicator. What you're actually producing doesn't really matter. What really matters is your order activity. So Dover is a good example of that this morning, where you have revenues up, whatever it is, 10, 13%, something like that, and they have all the usual so Dover's a weird conglomerate of little manufacturing companies. They make fuel pumps and refrigerators and food service equipment and sundry pumps, all kinds of stuff in there. There's 30 or 40 little manufacturing companies, and they claim that they're good at manufacturing and all that stuff, and you can argue about the valuation or whatever it is, but it's a good read on what's happening in sort of larger than job shops, smaller than world scale factory manufacturing in the U.S. And what you see is just off the wall order activity. So they're getting so much demand in the door that they are having trouble keeping up with, because of all the disruptions and stuff like that. There are issues around that. But you're seeing book to bills, orders, backlogs are up 77% for one segment, 53% for another. Even all of them are up massively on a 13% revenue increase.
That's the answer. We show that in the macro deck, by the way. I first show, and it takes a while. Even sophisticated portfolio managers and CIOs, I'm like, okay, look at this slide 54. The inventories are the ball underwater. And then look at slide 55, we show them auto inventory. Then I show them slide 56, and I show them backlogs, to your point, as a leading indicator for the inventories or revenues to explode to the upside. So you're basically with a micro example, which isn't all that micro. That's a pretty broad-based company. You're giving revenue growth rates that you said they reported 13% revenue growth rate, and backlogs are up 50 to
organic revenue. And so for some segments, the total, so they have some segments that are really the food service stuff is doing badly because of, I think, just people aren't putting a lot of CapEx into the restaurants at the moment. They might be buying stuff. They're buying stuff that's used. The industry in general has excess capacity. But organic revenue growth is 13%. Bookings are up 27%. And backlog is 79%.
The bear case is that inventory doesn't come off the ship, or that it doesn't come eventually out of the manufacturer. That's not a bear case. That's a ball underwater. You're gonna get your face ripped off case, which is the point.
We love that too, because it just means that future revenues are going to be better. I'd love it if revenues always miss and backlogs always beat, right? That's the awesome. Just keep accumulating those orders. Eventually you're Boeing and you have a 6-7 year backlog of revenue, and everyone feels sleeps well at night thinking about your backlog or whatever crap people say. But Yeah, I mean, they're definitely real. I mean, there's a difference between the real economy where there are genuine labor problems here and just in general finding qualified people to even run automation systems, right? There are real supply chain challenges, right, for different commodities. But if you're trying to get the one number that really, on a fundamental earnings report, like what number you're going to look for, you're going to look for orders. And nothing else really matters. It's just orders. That's what people really key off of through earnings season. And that's all good for orders. Like no supply, you need to replace some labor with some equipment. These are all things that tend to help orders. And that's very quad 2. That's very good for the sector.
That was very helpful for many people, I am sure. Because again, working with live examples and what companies are reporting on a real-time basis in conjunction with the cycle is the only way to do it.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.